This is Retirement Success with Steve and Elizabeth Holland and me, Todd M.J. Schnitt. For over 30 years, Steve and Elizabeth have been protecting your wealth or helping you create the retirement income that you need by creating inflation-adjusted, tax-advantaged, customized plans, because your retirement may be 20 to 30 years of unemployment. The Holland Group Retirement Wealth Advisors has the experience to take you to and through retirement. So let's make the rest of your life the best of your life. It's all in the name. It's Retirement Success, the name of this radio program, and the only acceptable outcome is just that, retirement success. Welcome, everyone. Great to be back with you. I'm MJ, Todd Schnitt, along with Steve and Elizabeth Holland, and today we're going to discuss something kind of psychological, and that's mind over markets. And we've seen plenty with the markets. So how do you keep your cool when the markets go absolutely insane, crazy? The markets are all over the road. The reactions are extreme. That is what we're going to focus on today. Steve and Elizabeth, great to be back with you. Let's talk about mind over markets.
So I love that whole concept of mind over market. You know, most people think in mind over matter, you know.
That's
but
right,
basically,
sure.
Mind over market really gives you the thought process of saying, so it's really, that was a great question. So whether you are a man or a woman headed into retirement, emotional control can really be a powerful tool in the financial arena. And this is something that we talk about. But for women especially, we know that you spend a lot of time managing the finance or being a caregiver for your family or a parent, an aging parent. And retirement planning can be really stressful in a down market. And it can really hit you really hard if you're not really prepared for it. So it doesn't matter, male, female, everyone reacts about a down market, how mind over matter, how that goes.
A down market, a sell-off, a crash, a correction. It gets everybody's attention, that's for sure. And I think, Elizabeth, the most dangerous threat to your wealth, it's not the market. It's the panic reaction that you have to the market. That's really, because there's nobody there saying, you better sell right now.
Right.
The people who do that, they're listening to that little voice inside their head.
Sell,
right?
sell.
Get out.
Yeah.
Keep what you got.
Yeah, but you guys got to also look at it and say the media really makes a big difference to some people when they're stuck looking at what's happening. The media kind of controls some people sometimes. I feel the media has a big play on it.
Oh, definitely. If I had $1 for every single time the market or every single time the media said everything's going to fall apart and be terrible, I'd have many, many dollars.
But if you were Nancy Pelosi and you knew when that was going to happen.
Right. Well, that's what I do. I have her on speed dial. I call her. I say, hey, Nance,
Nan.
how's things going over there on the West Coast? All right. So is this, are you going to dump this stock or are you buying more? And, of course, she tells me the answer, and then we're good. We're good to go. Imagine if it was that simple, right? You just call up one person, and they have all the answers. Not going to happen ever. You know what? I remember because we've dealt with this company so many times over the years. The company that I want to bring up is Delbar.
Yeah.
DALBAR. Of course, you know that name. You know that name very well. Delbar is a quantitative analysis on investment behavior. And nobody does it like Delbar, right? Because they've been doing this for 46 years. 46 years. Elizabeth, that's longer than you and I've been at this.
Yeah.
And there's not too many people that have been at this retirement planning, financial planning, profession as long as we have. But Delbar, 46 years. So pretty incredible. But the research from Delbar shows that the average investor consistently underperforms their own investments due to one thing, and that is emotional-based timing mistakes. They buy high in confidence. Pretty easy thing to do, right? When the market's rising, it's real easy to buy. Yeah, it's going to keep going up. I'm going to buy. I'm really feeling confident. But they sell low in fear. And that is the problem, selling at a low, selling when the market actually is on sale.
So
you mentioned Dal Bar. I
Yeah.
thought that might be some hot new bar in downtown St. Pete on, like on Central Ave or something.
Yeah,
it
kind of sounds like
hey,
it, right?
Hey, after work today, you want to grab a drink at the Dal Bar?
Right.
You know what?
Yeah, let's talk about emotional investing.
St. Pete is opening so many different restaurants and bars, so it could be very well be a Del Bar. We don't even know it.
The Dal
Right.
Bar.
You never knew it.
I want to mention that women, often perceive as more risk adverse, right? So women tend to be more shy about taking risk.
Right.
They
That's
may
very
hold-
true. That's very true. Yeah.
I mean, you sit down with a lot of people, a lot of women, and I would think single women have the most fear of really taking risks.
We ask that question every single week to new
Yeah.
people. We say, we call it our SCI, our Safety Concern Index. The staff calls it the Scaredy Cat Index. And it's pick a number from 1 to 10, except we reverse it. And we say a number 1 is somebody who puts the pedal to the metal, who wants to take, who's a long-term investor, somebody who isn't frightened by market sell-offs and volatility and all that. And a number 10 is somebody like my sister Donna, ultra conservative, doesn't want to lose money, right?
Yeah, but I would also think your sister Donna have a husband, but these are single women who have, spouse have passed, or they basically never got married or whatever it is,
Yep.
and they're just so fearful of taking a chance.
But even when we deal with couples, it seems to me that the wives are much more conservative. They don't want the risk. Much more conservative than their husbands, their spouses.
Your wealth is on the line here, folks, and you don't want to leave anything to chance. All you have to do is call the Hollands at 727-228-6449 to get a complimentary financial review. There's no cost here. There's no commitment. There's no obligation. But you really should do this now, sooner than later. And like they say, there's no time like the present. This is your shot to turn confusion into clarity. Ask the Hollands questions. Steve has been known for decades as the second opinion guy. Are you pointed in the right direction? Do you have the right investment strategy for investment income? Do you have the correct full retirement plan, including tax planning? If you're working with someone that does not bring up tax planning, that is a major part of any retirement plan. And if that's not part of what you're doing, if it's not an integral part, a major component, then you really should run, because taxes can be crucial and taxes can really clobber people over the head in retirement. The Hollands will put all of this into focus. The Hollands will build you these plans. They'll show you what they would do, why they're doing it, what's different about it. It's a no obligation proposition. Just call and ask. Any questions you have, just call and ask. 727-228-6449 for the Holland Group Retirement Wealth Advisors, 727-228-6449. Or all the contact information's on their website at askthehollands.com. That's askthehollands.com. Question: what do you feel when markets fall? This is, another very important area. So what is your emotion? And you got to kind of zero in on the emotional understanding and this gap, which is all tied to emotions when it comes to returns. You have to have your mind in the right place. You have to make sure that your brain doesn't sabotage your investments.
Wow. Boy, did we do our, due
Our
diligence
homework.
today.
Yeah, you betcha.
My goodness. Goodness gracious. So you are correct. The brain, people does sabotage just, their investments. They sabotage their relationship as well. So here is where the neuroscience really comes into play, right? So your amygdala, the brain fear center, which is the emotional part of your brain, it can't tell the difference between a bear market and a bear chasing you. So that's the process of it.
Wow, Dr. Elizabeth, I am very, very impressed. So now I'm just thinking about a bear chasing me. So that
I
would
can't
be,
tell the difference.
That would be pretty bad. But, the real performance killer is always behavior. It boils down to that. And this is why we tell clients that maybe you should look at your statements once per quarter. Maybe you should, at the very, very most, look at your statements once per month, not every day. Don't log into your account every single day and say, oh my gosh, Trump said tariff 3 times today, or, Trump and Musk are fighting now. Oh no, what's that going to do to the market? Or, oh no, Trump and China had a meeting and it only went for a half hour. Oh no. There's always going to be noise.
And Milano slapped him in the face. Wow, that's a different president.
Right. No. Yeah, we'd have to go to France to see that. But yeah, I mean, when it comes to fight or flight, what should you do? So are you going to fight the market? Are you going to flight? Are you going to get out of the market? This releases stress hormones and impairing long-term thinking. That's not good. That's not good for your investment success. Investors start chasing safety or returns at the worst time. And when they do, they always suffer from it.
So we are emotionally wired to fail at investing unless we can, outsmart our biology?
Yes, exactly. But awareness is step 1. Step 2 is what we talk about all the time, a strategy. You must have a plan.
Yeah, you definitely have to have a plan. I like to think of it this way. You have this circuit breaker, right? So when volatility hits, pre-established rules are going to protect you from knee-jerk reactions, right? Because the breaker hits and you stop and think about it. You're not just reacting immediately and selling your portfolio.
So what you're saying is that when you hit the breaker and all the lights go off, you freak out.
Well, I guess, you could have 2 different examples. So the circuit breaker, that box in the garage that clicks if you overload something. So the circuit breaker will cut off. But also, I guess you can also talk about, maybe like pulling up the emergency brake in your car,
Right. Except our breaker is in the pantry, which is kind of neat.
Gotcha.
Because you can go in there, turn the lights back on, and turn around and see if you want a snack.
Steve, when was the last time you blew a fuse? All right.
I try to twice a week at least.
Very good. So one great example is your portfolio rebalancing. We talk about rebalancing just about in every single show.
Yep.
So it's based on your plan, not emotion, guys, not emotion. Another only check in performance quarterly. You just said it, Steve.
Yep.
Don't be stuck to the TV or the your computer and check your daily. Oh, what did I do today?
Log in. And it's so easy. So many people log on right on their phone, and they do it at red lights, for crying out loud.
So we don't want you doing that on a daily basis, and we certainly don't want you doing that red lights, because basically at the red light you're just going to stop and you're going to piss everybody off behind you.
Because red lights always eventually turn green.
Yes.
And the people behind you, they got one
Not
thing
happy.
on their mind. Let's go, pal.
Right,
Well,
go.
unless the circuit breaker got tripped at the intersection, then maybe the then the lights will be off altogether. So
Right.
Always treat that as a 4-way stop. Folks, the Hollands are here to help. 727-228-6449. Call Steve and Elizabeth. They're here to help you one-on-one. What questions do you have that you would love answered? Get that second opinion. Let the Hollands build you their idea of your investment plan to bring in that investment income every month and the full retirement planning. The Hollands will work with you. They'll build you these demo plans and show you exactly what they would do differently than what you're doing right now and how they believe the outcome is going to be more beneficial for you. Call the Hollands, 727-228-6449 to get the ball rolling. Hey, start with some simple questions if you want. 727-228-6449. What about quarterly reviews? Like brushing teeth instead of flossing every hour, let's say.
Yeah, that reminds me of you, Elizabeth, because you are great at flossing, and I can't get my hands in my mouth. I mean, maybe my fingers are too big, but you're great at flossing. But yeah, I saw this comparison. So a quarterly review of your investments is kind of like brushing your teeth instead of flossing every hour. That makes sense.
The quarterly review, I agree with you. It's for most people, it's really important for them to have it. For some people, it's not necessary.
Right.
Okay, so we're just going to be straight about those quarterly reviews. Some people want quarterly reviews, and there really is not much for them to review. They're not in the market. For the people who are not in the market and in fixed accounts and all of that, annuities, people who are getting a monthly income that is fixed, a quarterly review is not going to really help you.
They definitely don't need that. People in that situation probably need a review once a year.
Right.
But most of our clients who are invested in securities,
yes,
they do like a review like every 6 months.
Every 6 months is definitely.
Yep.
So exactly. Less obsession, more outcome, a better outcome. Because basically, when we see something is working, we don't change it. When we see something is not working, we already know to change it.
Mm-hmm.
Now, Elizabeth, you brought this up earlier in the program about women and how volatility hits women retirees harder. And a lot of women tend to be more risk averse than men.
Yeah, you're right. I just, as I mentioned, I feel, and I'm sure, Steve, you feel the same way, we see women get really, very heartfelt about how their income is going, would have enough money, they're single. They don't have that partner to discuss this with.
Yeah, especially if they're on their own. Yeah, you're right.
Women retirees face longer lifespan. So simply means women are living longer. They live longer and they have more solo years. They don't have that partner to really go back and forth with. I'm sure if they have a good financial advisor, that this will be something that's already discussed and giving them the sense of comfort. And often less accumulated wealth because they spend time raising a family,
mm-hmm.
taking care of a spouse afterwards, or taking care of an ailing parent.
Right.
And we see this. This makes volatility more dangerous for them, especially if they're withdrawing that income on a monthly basis. They tend to be more conservative.
Right. And that's why we talk about, which we've talked about many, many times on the show, sequence of returns risk. Because this can wreck your plans. This can derail any retirement. Selling investments consistently in a downturn is going to do one thing. It's going to lock in permanent losses, which become very, very hard to recover from. Hey, MJ, you remember, I think it was like last week, we talked a little bit about the break-even burden. And the break-even burden is really something like, let's say the market comes down and it comes down like 25%. Well, you need 33.4 just to get your money back. And if the market comes down and, it's a significant drop, it's down like 35%. Well, now you need like 53.9, almost 54%, not to make money, to make your principal back. So the break-even burden is very, very important. That's someplace you never want to be, and we discuss that all the time. And that's why I think it's so important that every investor really knows about sequence of risk and how that can affect them.
It's very important that you call the Hollands and let them introduce all of these areas that we discuss on all of these shows on an individualized basis, and be able to filter your life through all of these issues and topics that we discuss. And, your portfolio, your dreams, your desires, everyone's different. When you work with the Hollands, they will build these plans for you complimentary, no obligation, no commitment. Just call and ask and have a conversation at first. You'll be very comfortable with the Hollands very quickly. 727-228-6449. That's 727-228-6449 for the Holland Group Retirement Wealth Advisors. That's what gets you right in. Just a quick phone call. If you've been listening to the show for a while and you haven't just taken that step to call the Hollands, do it. Finally do it and see what the Hollands can do for you, what a difference the Hollands could make in your retirement planning, in your investment strategy. Have the retirement you've dreamed of to get you to and through retirement and not want and not feel like you could have done better. Talk to the Hollands about actually doing better now with a better strategy, a better plan. 727-228-6449 gets you through to the Hollands. 727-228-6449. We're just halfway there. We have a lot of additional ground to cover. Let's try to squeeze one more in before the bottom of the hour break. What about building a volatility buffer?
Volatility buffer. That sounds so smart, right? But really what it is, it's playing defense in your portfolio. It's playing or planning defense. This is taking a portion of your portfolio and making sure it is in a stable asset, making sure that it is in cash or cash equivalents or guaranteed products to avoid selling stocks during the downturn. Elizabeth, I remember that when the Bucks initially, the Tampa Bay Buccaneers, when they initially won the Super Bowl, not the last one, not the COVID Super Bowl that we were at, but the previous one, which was back in 2003. Now, remember, back in 2003, when they won the Super Bowl, that was a huge deal because the Bucks were really bad for a long period of time.
Bad, Steve. That's an understatement. Bad.
Right. They were terrible. They were absolutely terrible. But they won. And I used to say to clients, how did they win? Did they win through their offense or defense? And they won the game because of defense. Their defense was absolutely incredible. And that's how you win when it comes to portfolio investing many times. You have got to have a good, now you have to have a good offense, of course, but you also have to have a very good defense to make sure you don't have late in life be subject to huge portfolio losses.
We definitely don't want portfolio losses. So this will actually buy yourself, your investment, some time to recover. And that's what we want, the recovery time. It's like, packing, you always talk about it, Steve, packing an umbrella, before the storm just to make sure you have everything in place. You want to make sure your investments are in place. That's playing defense, right? You're doing your defense there. I'm pretty sure that's what you meant.
Yep, you betcha. That's right. Making sure you can look your client in the eyes and say, the market's down 35%. You're down 8, 10, 12 at the very much. Making sure you have accomplished what they can tolerate.
So going back to your emergency breaker, all these are in line with everything about making sure your investments are in place.
That's right.
And of course, emotionally, that buffer buys you peace of mind as well. So you don't go as crazy as you might because of market volatility. Call the Hollands. They're here to help you, folks. 727-228-6449. Listen to what Steve and Elizabeth have to say as they analyze where you're trying to go with your retirement and what you're doing now and whether you can get there and what they can do differently to make sure that you don't have a nightmare retirement and you have the retirement that you've actually dreamed of, the good dreams, not the bad dreams. Call the Hollands, start with some questions, let them build you these portfolios, let them build you the full retirement plan. They're going to lay things out for you confidentially. They're going to lay things out complimentary. They're going to lay things out with no commitment, no obligation, and no cost to you. There's nothing wrong with getting a second opinion. And again, it's totally confidential when you call the Hollands. 727-228-6449. That's 727-228-6449. If you ever miss the phone number, we'll give it to you again in a few minutes. Or everything to contact the Hollands is on their website at askthehollands.com. That's askthehollands.com. When we get back, it's the second half hour. We've just scratched the surface. We're talking about mind over markets and how to get your mind in the right place. When we return, another strategy, the 72-hour cool down rule, and that's next.
Hey, Sean Hannity here. Security matters, whether it's at home or when you travel. Our national security, it's certainly important when it comes to your money and your retirement income. And that's why all of you need to work with people that you can trust to do everything they can do to protect your life savings. Now, here in Tampa, there's Steve and Elizabeth Holland with the Holland Group Retirement Wealth Advisors. They've been helping families just like yours retire for more than 30 years, so they have knowledge and experience to help properly properly guide you through the next stage of life. Take the first step towards securing your retirement income. Call Steve and Elizabeth Holland with the Holland Group Retirement Wealth Advisors right now, 727-228-4673, and check them out for yourself and see if they are right for you. 727-228-4673. Now, you've worked for decades to save enough to retire. Make sure your savings are protected. 727-228-4673.
Welcome back, everybody. Great to have you with us. This is Retirement Success from the Holland Group Retirement Wealth Advisors. MJ here, Todd Schnitt, along with Steve and Elizabeth Holland, and we're discussing how to get in a position of mind over markets. You know, not to let the markets control your mindset and really run you ragged. So we've been going through all of these systems and processes and states of mind, and really there's a lot of psychology here. Next, I want to talk about another strategy, and that's the 72-hour cool-down rule. Let's explain that.
So a lot of people don't even know about a 72-hour rule, right, Steve? What you have to say?
I would say 9 out of 10 investors will not know what this means.
Okay. So this is where we do the show and we try to educate and help our listeners as well as the clients to just understand what the 72-hour rule is. So it's another helpful tactic that we have taught our clients. 72 hours rule, it simply means that, you know, whether the market drop or spike, wait 3 days, people. Wait before you make any big decision in reference to the market.
And I want to make it clear, we're not talking about Friday afternoon. Okay, I'm going to wait Saturday and I'm going to wait Sunday. No, the market's closed those 2 days.
Right.
All right, so we want you to wait 3 days of 3 market days, 3 business days. And I think that's very important because really what we're saying is you need to chill out for a couple days. You need to really hit the pause button and let the panic settle down a little bit, right?
Like when you and I have a disagreement or maybe a
gosh, Elizabeth, it's been so long. I can't remember.
Don't wait 3 days to talk to me, Steve.
Everybody to timeout. Everybody cool off.
That's right. I think, we could give a marital advice on the side because, we've been together more than 40 years.
Yes.
And I think... knowing you, I think the worst thing in the world, if we have a fight, is to continue.
A disagreement.
Or a disagreement is to continue. Because guess what? It doesn't get any better. So I like that 72-hour rule. I like that. Okay, I'm going to leave her alone. Leave her alone for a day or so,
yes,
and everything will be fine. It works wonders when you talk about your finances as well. It really does. So let the panic settle so rational thinking comes back. So you're thinking of different things that you might want to do. And, of course, you should have a financial advisor, a retirement advisor, somebody who works with wealth late in life. It's very, very different having an advisor who's, say, 25, 35, 40 years old. They have no clue what it's like to be 60, 65 years old and looking at your pile of gold, if you will, and knowing that it's not going to get any bigger unless it grows.
As well as a lot of them have not been through the turmoil. They haven't been through the dot-com crash. They haven't been through 9/11. They haven't been through the financial crisis of 07, 08, 09. There's a lot of experience that comes with living through these markets and learning and living through the ups and downs that we've actually had. Listen, bottom line is don't click sell in the heat of the moment. Sleep on it twice, 3 times, 72 hours, and just don't make rash decisions at the spur of the moment in many cases.
Yeah, that's so true. I like the story that, now we've told this a couple times, but it's a pretty effective story because it's so true. Remember that time that I hired a personal trainer?
Oh, yeah.
And I was in my early 50s at the time. And I said, all right, that's it with our busy schedule. I'm way too tired in the evening, so I would take some time off during the day.
Lunchtime.
Lunchtime. And I would go over to Gold's Gym, and I had this personal trainer. And the problem was the trainer was like 23, 25 years old. And he beat me up royally. And I remember coming back to the office, and you looked at me and you're like, oh my God, are you okay? You're as white as a ghost. You look like you're about to pass out.
Yeah.
And it was bad. It was really bad because, when you get hurt and you're in your 50s or 60s, when you physically get hurt, it could be several weeks or months before you actually get better. But when you get hurt when you're in your 20s, guess what? It's usually
You bounce back.
you bounce right back the next day, maybe 2 days later. So I had a trainer who had very, very little experience with someone my age. Or he just doesn't like people our age because maybe he beats up a lot of people. But anyhow, it was really bad. It was really bad. It's the same thing if you have an advisor who has very limited experience, somebody who's been only in this business, say, 8, 10, 12 years. No, if you're trusting someone with your life savings, don't you think, Elizabeth, is this a fair response, that you should be with a retirement advisor that's been doing this bare minimum 20 years?
Yeah, because basically you've seen, like MJ just mentioned, you've seen the ups and downs on the market. You've lived through that. You know that experience. You know what it feels like. You've dealt with clients on it, and you know how to really come back and make a difference in the portfolio.
Right.
And
Not somebody who says, yeah, I read about 9/11. I was in the 9th grade back then, but I hear it was pretty bad for you investors.
Right.
No, that is not good.
And here at the Holland Group, we have software that shows you your comfort zone. We'll show you exactly, for example, what would you trade a 6% loss for a 12% gain? We always have this conversation with people and say, what is your risk tolerance?
Right.
What number are you? And then we do the test with the software, and it's totally different. Your personal risk number helps align or realign your investment to match your emotions.
Yeah, and I would just throw in real quick, I think we have the very, very best risk analysis software in the industry because we've seen it all. We've seen all these different risk analysis type scenarios. What I like about the software that we use, the questions are almost based like you're on a game show. Like, would you take door number 1 or door number 2? Because you're absolutely right. One of the questions they say is, would you feel more comfortable? Would you trade a 6% loss for a 12% gain? And if people say, oh, yeah, I definitely would. Okay, what about a 15% gain for a 15% loss? And they keep spreading them further and further apart
Right.
to really find out how people feel about risk. And we dive pretty deep when it comes to calculating or when it comes to finding the answer of how people think about volatility.
How many of you listening right now are saying, yeah, this is the kind of clarity that most people don't get from a standard brokerage? Get a hold of the Hollands, 727-228-6449. Pick it up from here. Say, hey, I'm listening to the radio show. Let's go into these areas that we're discussing, but on an individual basis where the Hollands can apply all of this knowledge to your personal situation. Call Steve and Elizabeth Holland at the office right here in the Tampa Bay area. They've been a fiduciary firm right here in the Tampa Bay area, founded. They remain here. They're not pretending to be local, but they're really based somewhere else. No, right here, Tampa Bay. I, MJ, Todd Schnitt, my history, radio broadcasting here in the Tampa Bay area. Get a hold of the Hollands at 727-228-6449. 727-228-6449 gets you right through to the Hollands. 727-228-6449. Or if you ever miss the number, we'll give it again in a few minutes. Grab a piece of paper and a pen. You can write it down. Or all of the information to get a hold of the Hollands, email address, the phone number is all on the website at askthehollands.com. That's askthehollands.com. Let's talk about creating your risk-smart retirement blueprint. What exactly does this entail?
There's a question for you that I don't hear not too many people ask at all. Great question, MJ.
Especially those two words together, risk smart, right?
Right.
Yeah.
Yeah.
Gets everyone's attention.
So MJ been doing his homework and more. Have you been staying late after class?
Oh, yeah.
Because you're getting these, because we don't hear people talk like this, and people want questions like this answered. So now what for us, we match your risk tolerance with your portfolio structure, and we call that risk segmentation, right, Steve?
Yeah, we do. And you can break it up. If you want to break it up in 3 segments or, there's a lot of advisors out there that use bucket planning. And bucket planning to me makes sense, but when you use buckets, it kind of sounds cheap. I'd rather say segments, but you can call it bucket planning if you like. So in the first segment or the first section of your portfolio or the first bucket, if you will, we would say that this is preserved income foundation. This is going to cover stuff inside your budget that happens every single month, like housing, your health care, utilities, real estate tax. Now, real estate tax comes once a year, but you can divide it up into 12 to see what you're actually spending if you were to look at it on a monthly basis. All types of insurance costs that you're paying. You're paying for car insurance and you're paying for, again, health insurance, which would fall under health care. But anything that you're paying for monthly that is not going to be volatile. It's pretty much going to be the same thing. So that is bucket number 1. Now, the second bucket would be the strategic growth bucket. This is for you long-term investors. This is when you can take a portion of your portfolio and say, okay, so this portion of the portfolio, this 100,000 or this 300,000 or $500,000 or whatever it is, I'm going to invest this long-term, and I am going to ride the power of the market. I'm not going to be concerned with short-term volatility. I'm going to turn off the noise. I'm going to let this do its job, and I'm going to either beat the S&P 500, I'm going to tie the S&P 500, or I'm going to slightly lag the S&P 500, and I'm going to do so in a way where I'm not going to check my statements every week or every other red light or right. I'm not going to do that. I'm going to check my statements maybe quarterly, maybe only twice a year, because I realize this is a long-term investment strategy. And then the final bucket is what we call your liquidity, your reserve, your emergency, your opportunities, cash equivalents, stuff that will never go down in value. Now, you got to be careful here because we happen to be still in a very tricky bond market. You look at bonds, you look at some of the biggest bond funds in the country, and their 3, 5, 7, 10-year total return is terrible. It's at a loss. 7-year, 10-year, you're making maybe 1.5%, maybe 2% per year. So you got to be really, really careful how you invest for cash opportunities and, of course, emergencies.
Wow, so you broke that down really good for the 3 buckets that we're talking about that we do for our clients. So, when your lifestyle essentially are protected, the headlines won't, you won't feel like a personal attack.
Right.
For sure, because now you have these 3 buckets and you're exactly, and we explain this in depth, how this works. So it's not like, oh, geez, what bucket am I supposed to use? That's when your retirement confidence is at the high. And we build these plans every single day for men and for women. And for anyone who wants a plan that has all this concern about risk-smart retirement.
Right. I like that term you just used, retirement confidence. It's kind of like the name of this show. It's the name of this show. It's the name of our TV show. Retirement success is what we're all about. And that is why we do these shows, because we don't want to, you can't really educate everyone on these shows. So we try to keep it pretty light.
Yeah.
But the important thing is that that we're here. We're not in Houston. We're not in Phoenix, Arizona. We're not in Los Angeles. We're not in Austin, Texas.
What about Indianapolis?
We are not in Indianapolis. Steve and Elizabeth Holland are here every single day in Clearwater.
What about Paducah, Kentucky?
Nope.
No,
We're not in Paducah. I've never heard of Paducah, Kentucky.
You haven't?
But here's the clue for people to actually think about when they say, here is the phone number for Tampa.
Right, that's what they do.
Here's the phone number
Or they'll
for
say,
Tampa.
in Tampa, call so-and-so.
Right.
Yeah, and there's nothing wrong with companies like this. You know, if you're the CEO of one of these companies and you want to have 15, 20, 30 locations around the United States, okay, go ahead. But that's not us. We are a boutique, and we give personalized service. And the people you talk to in the office, yes, we are the same people that are on the radio, on TV, and we do it every single day.
727-228-6449. That's 727-228-6449. Serving the entire Tampa Bay area. Whether you're in Tampa, South Tampa, whether you're in Plant City, whether you're in Wesley Chapel or Zephyr Hills or Palm Harbor, Safety Harbor, St. Pete, you know, Holiday, Newport Richie. Let's hear the other shows, you know, start dealing out that geography. You know, whether you're in Bradenton or, you know, down in Sarasota, you know, wherever you are, whether you're in Sun City Center, whether you're in Riverview or Brandon. See, let's hear the other shows start, you know, rolling out that geography, you know?
You know, it's amazing.
What?
You would think, people out there listening probably think that Schnitt has a map right in front of him, but he doesn't.
Right.
He's just rattling off all these cities, all these towns, you know, every part of Tampa Bay.
Well,
and
I
that's
spent
so true.
over half my life here. That's why. You
That's
know?
right.
You know, since 1994 when I rolled into town and I started, you know, the first radio morning show.
And you were 14 then,
you know,
right?
back years ago. you
Right,
know?
right.
And no, I was actually in my late 20s when I first rolled into town.
Yeah.
So, all right, folks, the Hollands are here. 727-228-6449. Call Steve and Elizabeth Holland. 727-228-6449. Let them answer all your questions. Let them build you these plans. Complimentary, no obligation. There's no commitment. There is no cost to you to call the Hollands, meet with them, have them build you the plans. Ask all the questions you want. Get some clarity, folks. This is your retirement on the line. Don't make a mistake. You can't go back and fix a lot of things. 727-228-6449 gets you right through to Steve and Elizabeth Holland. 727-228-6449. Or all the contact information is on their website at askthehollands.com. What about taming the market by rewiring your individual response? Let's talk about that psychology.
Yeah, that's very important. So really what we're discussing is the association that you have to your thinking about your invested your assets, your investments. Markets are unpredictable. I've been saying this for years. Markets, they're like the weather. You know, you can't tame the weather. The weather's going to do whatever it wants to do. You can't tame the market. You have to deal with it. And your emotions, they don't have to be unpredictable. They really don't. If you learn how to reframe market drops, market corrections, sell-off, crashes, downturns, whatever you want to call them, they all mean the same thing. But if you can reframe that in your mind as, Elizabeth, this is a buying opportunity.
Right.
This is definitely a buying opportunity. Or, as you've used the word many, many times, discipline, having discipline. So when the market crashes or corrects or sells off, if you can say, this is just a test of my discipline, and I'm not going to let it get the best of me.
This is a test. This is only a test.
That's right.
Of your discipline.
Of your investment discipline.
Yeah.
That's right. But it's so important because, you know, obviously the bottom line is you want one thing. It's the same thing we want for you, and that is investment success. That's why we call this show Retirement Success. That's what it's all about. You don't have to be emotional. You can learn how to eliminate that emotion, right?
Right. So you don't eliminate the emotion by just saying, okay, I'm just going to eliminate the emotion. You have to really work on it. You have to train it. You have to, like you talked about your trainer.
Oh, like a dog.
Yeah.
Yep.
You train it like sit, stay, paw, shake, you know.
Yeah.
Roll over.
Well, Ashton hasn't gotten to the rollover part yet, but he's
I don't
pretty.
think-
Actually, that
I don't think he ever
rollover works very well because you could roll over a 401k, for instance.
Yeah.
So
That'll be great. Yes, rollover.
Roll over that 401k. I'll give you a treat.
Yeah, here's a Scooby snack.
Right.
But you have to be, very focused and disciplined, as I always mention, when it comes to retirement. So you can actually enjoy your retirement. And you know what? We can help you because this is what we do by supporting all our listeners who call in, our clients, even clients with plans. We tweak those plans every couple of months or so, every 6 months, because things change.
Right.
And this is so important for our listeners to understand. We can fix anything in reference to your investments. This is what we do. You always say it, Steve. We do all the heavy lifting.
We do the heavy lifting. We do it every single day. We retire about, 5 to 10 times every single week. You're going to retire once in your lifetime.
I have a new slogan for the Holland Group. Let Steve and Elizabeth throw out their back.
I don't know about that.
Let them do the heavy lifting. How about that?
Yeah, right. We'll need a chiropractor in-house.
We'll throw out our back so you don't have to.
Right.
The Holland Group Retirement Wealth Advisors. It's go time.
That's right.
Listen, it's less about having nerves of steel. It's more about having a strategy that absorbs the shock. So, listen. Today's show, I think, has been very educational. I've sat here. I've learned a lot. If you would like to connect with the Hollands, it's very, very simple. We hope that the show has completely resonated with you, especially if you're a woman. Now, the Hollands work with couples, but a lot of women that are listening need a certain finesse or a special guidance. And, some just need some further help. And listen, Elizabeth, being one of the principals of the Holland Group, works wonders. Call the Hollands, 727-228-6449, 727-228-6449. No obligation. Get a second opinion. The Hollands are a team that they know what retirement confidence looks like. They've been doing it for over 3 decades right here in the Tampa Bay area. Go to askthehollands.com. That is the website. Or call at the office right now, 727-228-6449. That's askthehollands.com. All the contact information is on the website, or just jot down the phone number. The Hollands would like to speak with you right now or in a couple of hours or when you get a chance. Call Steve and Elizabeth, ask questions, ask for some help. Let them build these plans for you, full retirement plan, a full investment strategy, 727-228-6449, 727-228-6449 for the Holland Group Retirement Wealth Advisors. And now Steve, Elizabeth, and Alicia from the Holland Group Retirement Wealth Advisors will answer your email questions.
Tampa Bay, this is Alicia Holland DiBernardi here, advisor with the Holland Group. We are answering your question of the day, and I have Steve Holland with me.
Hello, Tampa Bay. Yes, my favorite part of the show. I've always said that. Definitely when we get feedback from our listeners, from our viewers, it means everything to us. It definitely does. Even if we get criticism, which we don't really get too often. But
no, everybody loves us.
Yeah, I think so. I think they do. But this is a great form of listening to our clients and listening to our future clients and sharing with them answers to their questions.
Yes, and this question is interesting that came in because to me, my first opinion formed was, is this another advisor or a broker that is writing us in and posing to get our feedback, or is it an investor that is really into investing in the market? And because just the way this language is used in this question is kind of unique than what we usually get.
Interesting.
So I will share. So Brandon, thank you for this, from New Hyde Park. And Brandon wrote in to say, Steve, What's the most underutilized investment you classify as a portfolio enhancer within your allocation arsenal recommended to clients?
my allocation arsenal. Oh, definitely cryptocurrency. No, not at all. With crypto, people don't really realize that we don't recommend it at all. It's not something the SEC, we are a SEC registered company.
Right.
It's not something the SEC wants us talking about, wants us giving advice on. So we pretend it doesn't exist because it's not regulated. Be very, very careful with cryptocurrency. Go online and read how many crypto companies have gone out of business.
That's right.
It's pretty scary.
Yep.
It really is. But I would say that under prudent, safe retirement planning, one of the a great portfolio enhancer is a MYGA, a multiple year guaranteed annuity. Now, there's a lot of listeners who say, oh, I've heard annuities are terrible. I hear they're all bad, blah,
Yep.
blah, blah. They're not. They certainly are not, especially ones that have no fees. MYGAs don't have any fees. They're kind of like a bank CD, but they're not backed by FDIC. They're backed by the legal reserve of the issuing insurance company. But a MYGA is something you can invest for only 2 years. So you get a 2-year rate. The 2-year rates are tax deferred, so you don't pay taxes on the money when it's sitting there growing, number one. And number two, the 2-year rates are still like 5.35%. And you can invest for 2 years, 3 years, 4 years, 5 years. Our 5 years are above 5.5% still.
Yes, still.
Which I think is great because look at the bond market. Look back at what happened in the past 3 years. Well, in the past 3 years, we got to bring in 2022.
Right.
Was 2022 a good year?
No.
It was terrible.
Yep.
It was terrible for bonds, terrible for stocks as well. So I like MYGAs, and I think it's a good investment portfolio enhancer
Yes.
to utilize to get 5% guaranteed in your portfolio. So you might want 10%, you might want 20, 30, 40%, depending how conservative you actually are.
And I think that really also is a good way to compare because people that are listening to this, they might be thinking to themselves, well, I'll just stick with the CD. But what's that point of distinction? How you are taxed on that growth.
Absolutely. And we can do better than many CDs that are advertised right now.
That's right. So great response, Steve. And thank you, Brandon, for that question. Thank you, Tampa Bay, for the questions that you send us. Keep them coming in. We love to answer them.
I want you to do your own homework. Hey, it's Glenn Beck. How many times have you heard me say that? With everything that's going on in the world, it is more important than ever. Same for your retirement. If you don't have a plan, how are you going to know if you're paying too much in taxes or when the right time is to take Social Security? Do your own homework. I want you to call Steve and Elizabeth Holland and their team at the Holland Group Retirement Wealth Advisors, 727-228-4674. They can help you create a retirement plan that will help answer those questions. Steve and Elizabeth have been helping people in Tampa Bay plan for retirement for more than 30 years. They're local, independent advisors, and their focus is you, their client. Call today. Create a plan designed to guide you into and through your retirement. Call Steve and Elizabeth Holland and their team at the Holland Group Retirement Wealth Advisors. Do it today at 727-228-4674. Start planning now. Remember, 727-228-4674.